In this video, I'll be talking about GASB Codification 11, Section 16. This section talks about the different types of funds that can be used by governmental entities. So these three different types of funds are proprietary, governmental, and fiduciary type funds. And within each of these three categories, you have the specific funds. And so proprietary type funds can either be internal service funds or enterprise funds. Governmental type funds can be general, special revenue, capital projects, debt service, or permanent funds. And fiduciary type funds can either be agency funds or trust funds. In this video, I'll be looking specifically at fiduciary type funds. Fiduciary type funds are used to account for assets held in a trust or agency capacity for others. They cannot be used to support a government's own programs because of this agency capacity. And then also because of this agency capacity, these funds will not be included in government-wide statements. And these funds use the full accrual accounting method. And so, like I said, both trust funds and agency funds are fiduciary type funds. And trust funds can be broken further down into three different funds. You can have pension trust funds, investment trust funds, and private purpose trust funds. And so trust funds and agency funds are fairly similar since they're both fiduciary type funds, but they're different in that with trust funds, you have to establish a formal trust relationship between the government and the other parties involved, and usually these funds will be more long-lived, whereas an agency fund takes only a custodial responsibility of resources belonging to others, and so this formal trust relationship isn't needed, and these are usually more short-lived. And so looking at an example in the real world, Minnesota State is composed of 37 different state colleges and universities, and they use agency funds. These agency funds are used for student organizations and clubs because these clubs can generate their own revenues, and so Minnesota State has said that these are agency funds because they cannot dictate the uses of the funds, and so Minnesota State is simply holding that money in an agency capacity. So then looking at a problem that involves trust funds, in this problem we have a county government that uses an agency fund to collect taxes for other governments. And within this problem, the county will charge a collection fee, but this revenue will not be recognized within the agency fund. It will be recognized in the general fund since agency funds can't recognize revenue. And so these first two entries we see here are where the city general fund and the county general fund are recording their tax levies. And so these are just simple entries where they record their receivables, their estimated uncollectible property taxes, and their revenues. And then this last entry is where the agency fund comes in. So the Ramsey County Agency Fund will record both the Roseville and the Ramsey County tax levies. And so for this, they will debit taxes receivable for other governments and credit due to other governments. And the amounts here will be just the total of the receivables between the two different general funds. So then looking at the entries within the agency fund once cash starts coming in, we can see that this first entry we will debit cash and credit taxes receivable for other governments and general fund for $350,000 each. And so this just means that out of the $600,000 in receivables, $350,000 have come in so far. And so that's the first entry. And then the second entry is where the agency fund is then distributing the cash that it brought in to the governments that earned that revenue. And so we debit due to other governments, credit cash, and credit due to general fund. And this last account here is because of the collection fee. So if there was no collection fee, these first two accounts would each be for $350,000, but because of the collection fee, the agency fund is going to hold this extra $1,000 for the general fund instead of giving that to the city general fund. And so then we can see in this third entry here that once the agency fund does distribute that collection fee to the general fund, we will debit due to general fund and credit cash. So then looking at these entries, but from the perspective of the city general fund, within this fund we'll debit cash, debit expenditures for the tax collection fee, and credit receivables for property taxes. And so we are debiting this expenditure because this full collection fee is being charged to the city since it's the county's agency fund. And so this is an expenditure that is taken out of the receivables, and they simply won't get the cash for that. And then this third section here, we can see the Ramsey County General Fund. They are the ones receiving this tax collection fee revenue, and so when the receivables go down by $292,000, they are bringing in cash of $293,000, $1,000 of which is the revenue from the collection fee.